Hello to all Fed employees and family members. Welcome back to our series, The Informed Fed. I'm your host, Jeff Roediger, and my partner in this series and the co-author of the book, The Informed Fed, Bryant Stone, federal financial advisor, is back. Welcome, Bryant. Good to see you again.
Yep, man. Good to see you as always, man. How's that things going?
Very well. We're getting close to the end of our book, chapter 10 today. For those of you that are new to this series, whether you're viewing this on YouTube or listening on one of our podcast channels, go back and review the previous chapters. There's some great information for federal employees on your benefits, retirement, and changes. And so that's what chapter 10 is about today. We are discussing with Bryant the TSP's Modernization Act that was implemented in 2017. We get a lot of questions on that. I know you field a lot of questions on the TSP in general, and this does come up every so often, doesn't it, Bryant?
Oh, for sure. Yeah, there's a lot of information that's out there for federal employees. Some of it's correct, some of it is not correct. And yeah, when this act came out in 2017, I actually remember it like it was yesterday, because I had just got started working with federal employees maybe a year or two before that. So yeah, I remember exactly when this came out and the effects of it and how it kind of changed the landscape of the accessibility of for TSP for a lot of people.
Well, before we get into the details of this, make sure everybody that you click the links below. I'll remind everybody again when we're done here today, but you can get a copy of Bryant's book, The Informed Fed. Also, My Fed University is the financial education firm, government contractor. Go over to the website, great information over there. And there's also a link where you can book a meeting with Bryant's team. And Bryant is offering a complimentary consultation to review benefits, retirement strategies, etc. So, wanted to remind everybody about that. So, click the links. Check us out on our podcast channel. So, with that being said, let's talk about this act, and I'll turn it over to you.
Well, thank you, sir. Yeah, like I said, when this act came out in 2017, like I said, I remember it like it was yesterday. I had just started working with federal employees maybe a year or two prior, and prior to that, they had a lot of restrictions as far as what they could do, what they could not do with their TSP. So when this act came into play, it was a big deal, and just to kind of give it 30,000 foot view, essentially what it did is it created more flexibility for the TSP and the employees as far as how to access the money, when they could access it, um, and also while they're working, and then also past retirement. Now, a few specific things that we can kind of dive into is that prior to the TSP Modernization Act, if someone did want to take a withdrawal, let's say like a partial withdrawal, they only had the opportunity to take one partial withdrawal. And that was either, now this is obviously after 59 and a half. And that's also something too to point out is that, because I was actually just speaking, Jeff, with a potential federal employee client the other day. And it was funny because he contacted TSP, and TSP representative told him that he was not able to roll his TSP over into an outside IRA account. And I had told the gentleman, I said, listen, there's one of the two things that could have happened there. Number one, the person that you spoke to at TSP might have just got started. I said, or number two, um, They just don't know what they're talking about. Either way, it's not good. I said
No,
because
either way, it's not good.
either way, it's not good, right? So I was like, I've been doing this a long time. I said we've done and helped a ton of federal employees roll their TSP out into outside IRA accounts. Once they've hit the age of 59 and a half. And the reason why I bring that story up is because I've called TSP with clients about certain things and trying to get some validation and some verification on some things. And sometimes I've called, they've not necessarily known what they're talking about. And it's not to say that they're a bad person and TSP doesn't know what they're talking about, but it's always good to cross reference and cross check that information if you're getting inconsistencies with an advisor like myself, and then obviously the TSP representative, because you got to understand that the people that work there are no different than the people that work at any other place of employment. Um, they're going to make mistakes. They may have an off day, whatever the case may be. So I say that to say that the with the Modernization Act, if you wanted to take a withdrawal, you're only allowed one partial withdrawal. And what that act did is now you can take up to four partial withdrawals within a year, which is huge because yeah, you'll get folks, once again that are still working. They've crossed the age of 59 and a half. And that's probably good to kind of drill down on that is that once the federal employee, Jeff, does hit 59 and a half, and not only the federal employee, but um, a lot of employees that do have employer sponsored plans. And I know I've mentioned this in prior sessions, is that they'll have the ability to take a partial withdrawal. So they can withdraw that TSP account. They can roll it to another IRA if they like, if they feel they have better options in that IRA. But now that federal employee can do that up to four times a year due to this act because, a lot of the times, and I always encourage, Jeff, my federal employees that I speak to and work with is that, that 59 and a half is that magic number with that TSP.
Yep.
Because typically, Jeff, at that point, right, they're contemplating retirement. They can kind of see the back nine per se, using golf terms.
Hmm.
In retirement, some people it may be 6 months out. People it may be 7 to 10 years, just to kind of depending upon their situation. But point being is they can see retirement in sight, and typically at that point, since they do have the ability to roll some of that money out to an outside account, I typically encourage my federal employees, whether they work with us or not, to explore those options so they can know what's available to them, right? Because you are limited inside the TSP as far as the investment options go. Now, they do have some low costs and they do have some good options inside there, but you are limited. Obviously, if you're able to um, move that money to an outside account, you open up the floodgates as far as the options that you have and the things that you can do. So um, that was one of the huge ones is obviously the flexibility for more partial withdrawals. Um, Another one that was huge, Jeff, is prior to the TSP Modernization Act, federal employees, when they did take out a withdrawal, it was done on a pro rata basis. So, like, for example, let's say that they had 80% of their account was traditional and 20% of their account was Roth. If they did take out a distribution, and let's say it was 100,000, that means that they would get 80,000 in traditional money, 20,000 in Roth, which kind of, I hate to say it, kind of stunk a little bit because maybe they didn't want to take money out of the Roth, or maybe they didn't want to take money out of the traditional. But what the TSP Modernization Act allowed them to do is now, if they want to specifically only take 50,000 out of the traditional TSP account, they can take 50,000 out of the traditional TSP account. Or if they want to take 50,000 out of the TSP Roth account, they can take 50,000 out of that TSP Roth account without affecting the other accounts. So that was huge because also for rollover purposes, when we're rolling accounts over for clients to other accounts, and we strictly want to set up a IRA account or a Roth account, we're not pulling outside of that other account. So that was huge. That was a great piece that was added to that TSP Modernization Act. Another piece that was added that was huge was the fact that in addition to the federal employee having monthly payments, once they retire. They have the option for quarterly. They have the option for annual payments. They have options to just take out, a payment at a time, kind of on an as-needed basis. Where prior they only can do monthly options or they only can choose the annuity option. They can, in addition to the annuity option, if they don't elect all the money to go into the annuity, they can also select monthly, quarterly, or annual options if there's obviously more money in that account. So as far as the withdrawal aspect of it goes, it's a lot more flexible. Now, with the TSP Modernization Act, Jeff, it used to be, and this was up to as of recent. So this is actually a good sneak peek, a good snippet that you're getting that's actually not in the book. So if you are listening and you've listened up to this point, this is a good golden nugget for you that you'll have. Is that with the TSP Modernization Act, they did allow you to do these partial withdrawals like we're talking about, or just regular withdrawals. But it used to be that you had to wait 30 days. You had to wait 30 days before you took another partial withdrawal. Or if you took like a one-time withdrawal, you had to wait like another 30 days after you did that. But as of May 15th of this year, that 30-day window is no longer. They removed that window. And really, the reason for that, Jeff, I don't know if you remember, but they used to have to fax in the withdrawal request to TSP.
Yes, I remember.
Uh, so
Hmm.
they switched to an online system back in 2022, which took some time to get things going. I mean,
Yeah.
it was a real cluster when it first came out, but now things have been smoothed out. So now there's not the possibility anymore for like duplicate requests at the same time. So now they did remove that 30-day window. So now if you want to take withdrawals out, partial withdrawals, you don't have to wait 30 days anymore like you used to, which was implemented, like I said, with the TSP Modernization Act. But that was a new change that basically updated this TSP Modernization Act as of this year. So once again, that's a new piece that you'll get if you've listened up to this point. Um, Another thing, Jeff, that I think was huge, and I'm just looking at my notes here, um, was prior to the TSP Modernization Act, uh, the federal employee used to have to withdraw that money out of TSP prior to their RMD age, or it would be considered like some type of abandoned account, and then the money would not continually be invested. So due to the TSP Modernization Act, they can continually keep their money inside of the TSP and have that money, obviously grow and keep, moving it in and out of the funds, whatever they want to do. So that was a huge piece, right? Obviously, because, some people, that didn't know that rule prior to that, they would have their account just sitting dormant in TSP without getting any type of compound interest on that, without even knowing it for years. So that was a huge piece. Um, and there's a couple other little nuances that happen with that act, but I would say those are probably the main ones people will probably utilize the most and hone in on. We're not obviously going to give you all of it. You got to read the book for that. But those are some of the key ones, Jeff, that I think are important. And I see it every day in my practice and working with federal employees, and really just having them understand the options available to them with
Right.
distribution inside the TSP, and not only distribution, but also allocation and also contribution. Those are all also other pieces that's important for the federal employee to know because, as you probably well know, I'm surprised how little that they know about the nuances of the account, and that's obviously one of the main reasons why we um, wrote this book and are doing summaries on these different calls that we're doing here.
Right. And, knowledge is power. And as you mentioned, with the TSP, you know, uh, inaccurate advice could lead to major financial miscues. And when you're heading into retirement, you don't get a chance to recover. So it's always good to get a second opinion.
No, for sure. I've seen it tons of times, and sometimes too, like when I'm not 1,000% sure on something, Jeff, I always let my potential client or client know, listen, I'm not 1,000% sure, so let me get you the answer, rather than
Yeah.
just giving you an answer that I may think is correct, because that's the last thing I want to do is give somebody the wrong advice, and then all of a sudden, I'm looked at as the idiot, right?
All right. I agree. I agree. That's why we're here. So great information as usual. So again, for those listening on the podcast channels, or if you're viewing this on YouTube or one of our other social media platforms, in the comment section and the content below, if you have questions, you can address them right in the comment section, and we do monitor this, so we will get back to you. You can also click the links in the content, book a meeting, as I mentioned earlier, with Bryant's team. That's a complimentary review, everything from what we just discussed. If you have specific questions, or if you'd like to get an estimate of what your three-tiered retirement is going to look like, you can also go to our website, MyFed University. Great information over on the site. And you can also click the link and get a copy of Bryant's book, The Informed Fed. So, again, we're here to help. Any closing comments, Bryant?
Any closing comments? I would say subscribe, like, read the book, and put this podcast on your playlist on a daily rotation, so you can get all the latest information in regards to financial planning.
Absolutely. Absolutely. 100% agree. So, okay. Look for chapter 11 to drop here in the next couple weeks, and go back and review the previous chapters. We cover everything on benefits and retirement, and reach out to us with questions, comments. Your feedback's very important. So thanks again, Bryant. Appreciate you as always, and we'll be back for our next chapter very soon.
Thank you, sir.
All right.
Investment advisory services offered through Red Hawk Wealth Advisors Incorporated, an SEC registered investment advisor. Top Rank Advisors LLC and Red Hawk Wealth Advisors Incorporated are not affiliated.